Mickey Dickey with his weekly update of the stocks that I'm looking for the next week. Now, again, these are stocks that I'm looking at for trends, for ideas of where the market is actually going, not necessarily to buy or sell. And again, that's not what I'm saying here. What I'm trying to tell you is what I'm looking for in the marketplace to tell me how to invest my clients. Apple's up here, that's just because they report next week. Now, typically speaking, Mondays don't have a whole lot that I'm looking at, but this particular week there are a couple that are of interest. So on Monday, you've got NXPI, which is a semiconductor business company. I'm looking at a lot of the semis, and again, not necessarily to invest in them, but I want to see how they do in relation to the sector as a whole and as an individual. So what I'm really looking for in the semiconductor businesses, just like Intel just reported, it was a poor quarter and they got crushed. I'm looking to see if you have semiconductors that actually do well. Are they, given props? So is the market reacting positively to that? So that's where I'm looking. That's why I'm interested in them. The other one on Monday is Whirlpool. They've had a couple bad quarters, which is going to help me out and understand a little bit of the consumer, but a little bit of how the real estate market's doing, the builders are doing. Again, so it just gives us a different part of the segment we haven't really seen quite yet. I mean, we've seen some of the builders, but we haven't seen some of the contributors to the builders. Tuesday, things kind of start off again, which is kind of normal. You've got Exxon, you've got Pfizer, you've got McDonald's, you've got UPS, you've got Caterpillar, you've got AMD, another semi, you've got GM. And then the other part of it that I'm really interested in is going to be Snap and Spotify, both report. So, which again, the nice thing about Tuesday is it gives us a very well-rounded idea of what's going on in the market. I mean, you've got automobiles, you've got Caterpillar for industrials, which Caterpillar has just gone crazy over the last 90 days. Which, UPS, FedEx have had some difficult time with international trade, and some, they had a tough time. So it's interesting to see how they do. Which UPS and FedEx aren't exactly the same, but they kind of overlap. McDonald's, again, different section of the economy. Pfizer and Exxon. Chevron came out and did some real neat things this week where they did a bunch of buybacks, increased their dividend, and all that kind of good stuff. And then today they kind of missed on their numbers. It's going to be interesting to see if that continues with Exxon next week. My guess is it's going to be kind of in that vein, and not that they're a problem, but again, a miss when you're, talking about 34 billion versus 35 billion. It's not a big deal. I mean, if you're talking about somebody that was supposed to do 2 billion and you did one, the 1 billion is a big number. But when, it's a billion versus, 35 or 40 billion, I'm just not as big of a deal for me. Wednesday, where things really get interesting with the Fed. Now, again, you've got these numbers that come out. So what I'm looking at is the numbers themselves, but how the market reacts to those numbers. I mean, so far, as I've shown you on the trends on my Excel spreadsheet that I have, things are going the way I was hoping and anticipating that they would continue to go, which is, the Dow's up 2.58% on the year, the S&P's up 5.9% on the year, and the NASDAQ's up 10.4%. Now, these were as of a specific date and time, or last Friday specific time, and I'm not talking about where they ended up for the day. I apologize. But, when you're looking at that ratio, that's the ratio I'm looking at. I want the Dow to go up a little bit, the S&P more, and the NASDAQ more, because that's how they went down. So what we're seeing on these trends, these value stocks, they're still doing well, they're still doing okay, but they're not going up like they did last year. Not that people are selling them, not the point, but they're not running into them either. They are continuing to put money into quality growth from what I've seen so far. Otherwise, the NASDAQ wouldn't be up over 10% on the year. But Wednesday with the Fed coming out, that's going to be an interesting thing, but it doesn't talk until, usually 2:30, 2 o'clock it comes out, and we get the numbers, and everybody's anticipating a quarter. Maybe it'll be a half. I don't know that there's really that much of a question at the moment. But the question is, how does the market take what Powell says starting at 2:30? So just keep that in mind. Don't go do anything before that. Just let it do its deal. Now, you also have that day, you've got Humana and you've got waste management, which again, two completely different areas. But I want to see how their numbers come out, and I want to see how the market reacts to them. And the bigger one's going to be Facebook later on in the day. So you're going to have Powell speak at 2:30. You've got Waste Management and Humana speaking, and then you've got Facebook on Wednesday. Going to be a very interesting day. All that after, you've got Spotify and Snap. Now, the last Spotify and Snap on Tuesday are going to give us some interesting things because over the last year, they've been kind of crushed because they've been part of this growth at any and all costs that everybody's just been selling out of indiscriminately, whether they were good, whether they're bad, whatever. But it's going to be interesting to see how they're doing and how the market responds to how they do. That'll be interesting. Now on Thursday, you've got just a load of stuff. So you've got, in my opinion, you've got the lead up to that, which is after hours on Tuesday, Spotify and Snap, which to me, they're so small. They shouldn't be a big deal, but last year, they actually moved the market, which was baffling to me. How a company that's $1 billion can affect Apple, or Microsoft or Google. It's interesting. And I understand that, Spotify and Snap, they have advertising, but I've said this before and I'll continue to say this. 90% of the world goes through Google. And if you're going to stop advertising, you're going to stop advertising anywhere but stopping your advertising at Google. That's just my opinion. So anyway, Thursday, you've got Apple, Amazon, Google, Merck, Starbucks, Honeywell, Ford, Clorox, which I don't know that I need to look at Clorox anymore. We've got a really good picture of what that section is doing because we've had Kimberly-Clark, we've had Colgate-Palmolive, and we've had Procter & Gamble. And as we've been watching those trends, they're exactly what we expected them to be. Their profits are solid because they've been able to jack up their prices. But the sales have been lower because people are starting to say, we've kind of reached a peak here, which to me is telling me that, maybe that industry for a short period of time is kind of peaked out because I don't think they can continue to raise and have continue the volume. I mean, that's the point. If you can raise your prices and you can continue to sell the same number of units, you haven't maxed out yet. But at some point when you raise the prices, you're not selling as many units and your gross sales come down, you've kind of maxed out. And they're all kind of saying the same thing there. So I've had this on my report for Clorox to watch them, but I don't know that it's all that important. Now, the one that most you probably aren't looking at that I'm looking at is Penn and Boyd Gaming. And you're going to go, why? Okay, here's why. Again, you had this whole section of the stock market last year that just sold off indiscriminately with your Teledocs and your DraftKings and your Boyd Gaming and Spotify. I mean, it just didn't matter what they did. Even if they beat numbers, it just nobody cared. So if that's the case, then just sell it, all right? Which was always the baffling part to me. You'd have a stock that at $3.59 was selling for $300 a share, and at 401 they come out and they did better on sales, better on gross sales, better on net profit, and guidance was better, and everybody sells it off. Okay, well, why? I mean, why did somebody pay $300 a share for it if you're not willing to pay $280 2 minutes later when they're actually in better shape than they were before? But that's what was going on in the market, which again is not rational, but that's what's happening. So you have to deal with the reality. So what I want to see with Penn and Boyd is they are in gaming. They are a part of DraftKings, but that whole sector of not profitable yet, but in an industry that most people look at and go down the road, it should be profitable. Now, whether it will be or not, we don't know yet, but I want to see how they do, and then again, how the market reacts to it. It's going to give us an idea on DraftKings, and again, not saying I'm to buy into any of this stuff, but it's going to tell me, are we truly looking at different sections of the market the way that we should, and differentiating them, and penalizing the ones that are doing poorly, and actually giving props to the ones that are doing well. So next week's going to be a really great week. The Fed kind of put some things in there because it's going to be really interesting to see how the market reacts to him. Is Powell going to come out and be very hawkish, or is he going to try to tamp down the fact that we're up 10% so far this year in the NASDAQ? Don't know. My guess is he probably will. I don't know that I care. What I care is how the market reacts to it. So if he comes out and he's real hawkish and he does the quarter point like we think, does the market sell off 5%? Okay. And the thing that also part of this is that if he does, and the NASDAQ goes down 5%, even though we're up 10% so far this year, keep that in mind. Is it a short jerk to what's going on? Is it a long term? Does he see something in the market we don't see? So the comments, the way he speaks and what he talks about it is going to be interesting because there's really nothing that any of us see that hasn't just been following what he's wanting to do. So when I listen to him, what I'm looking for is, again, how the market reacts to it, but more importantly, what I see is that he's raising rates, unemployment is not going up, which I don't think is a bad thing. I've never heard him say it's a bad thing. I hear him say that it's somewhat confusing because if he's raising interest rates, unemployment should go up, but isn't. But if his mandate is to bring inflation down and keep unemployment low, to me he's doing that. He's bringing inflation down by raising interest rates, and and unemployment has stayed low. And again, that's not him. That's just showing us that the economy is strong, which we got the GDP out, and it showed it was still good and even higher than we expected, which is great. I mean, if the GDP continues to be 2% a quarter, I don't know if somebody's going to really complain about that, throughout the course of this year. So that's what I'm looking at from Powell. I want to see where he's going, what the market does with it. That's really the most important things. Dickie out.